Okay, hello and welcome everyone to this live intraday strategy session. Michael Boutros here with you this morning. Great to be with you. Stefan, thanks for the updates. Permendra, great to see you. Eileen, it's always a pleasure having you in the room. I'm getting AVs good from everyone. All right, so lots to cover. We do have the major event risk on tap tomorrow, guys. It's going to be the CPI print as well for the Canadian economy as well as the U.S. That's really going to be the major focus as we head into tomorrow's event risk. The dollar seems like we're finally making this break beyond this major slope support we've been following for months. Before we get started, real quick, here's what the indices or the majors, look like as we start this session. So you see the dollar is stronger, or it's stronger rather. All the majors are stronger against the dollar today. Aussie with the biggest advance, 1.29%. Obviously, we got some strong data out of Australia yesterday with regards to the employment picture. Jay's asking if the AV is okay. I'm assuming the AV is good for everyone, right? Jay, just let me know if you're still having any problems on that front. But we're not quite out of the woods yet for the dollar index. So here's a quick look at what I'm looking at here. If you guys, all right, Jay, thanks for that. Eileen, thanks. Looks like we're good. So if you look at this slope support, again, we've been following this 4 months. On a closed basis, we hadn't made any type of meaningful push below. In fact, it's been pretty rock solid, okay? Yesterday was the first close we made below. Today you're seeing continuation. The only caveat, guys, is this trend line here, this slope line. And this is actually a slope line that dates way back. So I tend to give it a little bit more credence as far as pivots in price. Catching the highs, catching the lows, another pivot, support, and it looks like we're getting hung up on it right here. It's basically at 11,995, I want to say, just a bit lower from where we are trading now. But if we take a quick zoom out, you can see the reference points of the slope has been pretty clean. Support, 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 break, resistance, break, support, resistance, resistance. Mirror that to the highs that we made in 2013, resistance, and again, could act some support right now. So it might be a little bit of a head fake here. You might get some consolidation. There's major U.S. data tomorrow with CPI. You might get a bounce off this region. Long story short, you still want to stay bearish below that former trend support, now offering some resistance. And that's basically 12,050 is what we're going to work with on that. All right? Pretty big level. Pretty big level. The only other level I do want to bring to your attention, which is right around here, is the low day close that you made for, well, it's not the low day, but it's that stretch reversal close, okay? And that comes in at 11,972, just a bit lower. That being said, looks like we're finally getting it, right? We got some radical divergence here into the highs. You got a nice move. I want to see momentum start to break sub 50 to really get this going. Major key support not to 11,880, 11,850, this region here, which was a nice pivot in price and the highs for the opening range of 2015. So quick overview of the dollar index. Again, for those of you trading stateside, we can't trade this instrument, but it really offers a nice clear graphical illustration of base dollar movements, because it's only, where the ICE dollar index has a basket of 6, here you're only working with euro, Aussie, sterling, and yen. So it tends to give you a little bit closer picture of the base dollar move here. Okay? That being said, let's jump into the Aussie scalp from yesterday. Believe it or not, guys, we were all over this after the data print on the short side. And I do want to take a little treat for you guys here today. If you have time, we can jump into the metrics of how that trade setup went. I would like to actually take you guys through a 1-minute chart, if that's not too in depth, just to show you a quick picture of how this panned out with the triggers and on near-term price action. So bear with me one moment. Okay. So we'll go over this in a moment here. Okay. So the Aussie dollar. Start off on the daily. 77.09. If you guys remember the notes from the previous session on what I guess this was Tuesday night when I got back, basically the targets on the upside were 76.45, 76.67 to 70, and then 77 barrier was really the major resistance. This is actually where we got out of all the rest of the longs yesterday. You guys remember during the webinar we went over this at length. We were holding longs in the Aussie. The major initial target that we were talking about in the webinar was going to be at 76.45 level. Okay, we blew right through that. 77 region was huge. We took that out last night. Obviously, the data print as far as the employment figures fueled the next advance. So where are we from here? Be mindful of this near-term upper median line parallel. Again, this dates back to the highs that you made in July of last year. That's currently holding the highs. Tagged again, actually caught the exact stretch high last month as well. Okay, here's what it looks like on the intraday. So where would we make money on a short on a rally like this? It was right off the data print. So I just want to take a quick moment. Again, let's just do this real quick. It's a good drill, I think, to go over how that went. So one thing I want to just say real quick, when we're trading these data prints, guys, you know, how do I say this in a way that makes sense? When we're trading the opposite side of the trade, this is an uptrend. We talked about yesterday the fact that if we cleared the opening range high for the week, this would validate an upside bias in the Aussie. We've been working with the upside bias in the Aussie just based on the trigger breaks, looking for longs since early in the week, right? We're looking for long triggers while above 76.45. So, excuse me, not above 76.45, while above 75.90. Excuse me, that was the invalidation level that we drifted below yesterday. But the point being is when you're trying to take a counter trend trade or when you're trying to take a position against the near-term trend based on whether it's an emotional stretch, whether it's a data print, these are the time where you want to try to fade the moves. It's on this read when you get the market surging to a major key resistance. Both Jamie, I think on the swing side, has also been highlighting 77.90, I think is what he was looking at, as a major area of resistance. We had a nice upper median line parallel there. This is a longer dated pitchfork off the lows from last month. You had a 618 key retracement. This is from the decline off of the highs, okay, from March. And the confluence of the two, remember, those confluence regions are what we look to trade against. So my point being is this. Let's just show you how we went through the position. Okay, so the initial data print comes out. This thing surges right into 77.82. I'm just going to leave this here so you can kind of see what I'm looking at. 77.82, this was the major 618 retracement, the confluence region. We saw it come off. Still no positions taken. The first trigger on this 1 minute chart, guys, actually came when momentum broke below 60. We got to pull back. You're not doing anything up here, right? We're not trying to fade the market while we're in overbought condition because this is when the momentum is strongest. It was this break right here that prompted a position on the downside. I do want to just bring in the analysis here that we brought last night. Okay, so here's what it looks like dressed, okay? This is what we were actually trading on. So once we got that break, I'm just going to get rid of this retracement real quick. So once we got that break in momentum taking us below the 60 level, the reason you take that is because the risk to reward is so tight, right? You're working with a stop just against the 83 handle, quarter daily target, you're only looking for 24, 25 pips. So from a risk to reward ratio, we're at key resistance. You just got an emotional stretch to a release of data. So again, this is the time where you want to try fading these moves. And momentum's starting to go under. Your stop is against the highs, you're short. Boom. Got out of a little bit. I was over leveraged on this one because I thought it was going to be a quick pullback. But once we came out of this near-term formation we were watching, sorry about that. Once we got out of this near-term formation we were watching, this pitchfork broke, took off half the position. I was in extra heavy here because we were right up against a major key resistance, really good risk to reward. So you take off a little bit here, okay? Prudence pays, and this nimbleness is necessary when you're trading against the near-term trend. So you take some off the table. We're back at original position size per scalp. It comes into this high and holds. You tack on a quick retracement or a quick trend line just connecting the highs. You see that it's holding. Great. Keeps going, keeps going, keeps going. Momentum finds 40 support, but then on the upstretch, again, a trigger off the high continues to hold. continues to hold. On the second rebound here, when it holds again, I actually added to the position. This ended up being the only loss on the trade. And again, a little bit of a greed factor there, right? And probably wasn't the most prudent move. The stop was right against this high, and it eventually did get taken out. But on the last stretch here, shaved off another quarter once we broke out of this trendline resistance. So note that all the triggers I'm looking at, guys, are for the long, even though I'm holding the short position. Why? Because capital preservation when I'm fading a move against the trend is paramount. So as soon as I jump into that position, I'm looking for things to discredit it. Things to tell me, oh, okay, you probably want to jump out now. You probably want to jump out now. It's an uptrend. We're just fading it, right? So every time we saw a trigger that took us against our trend, you just take off some off the table. Now, eventually, okay, the trade will pan out. We took another entry here as this thing made an outside reversal. Again, you had a nice high to trade against for the session. Took that against the highs. Initial targets. Again, we were getting a break. Momentum broke. We shaved off a couple more pips. Inevitably, you're looking for 26 pips. That's exactly what we got. Now, mind you, this is only a quarter of the position that we've booked the 26 pips at. 15 pips were booked at the other quarter, and then, you know, we had a couple of entries, and exits here, which didn't surmount to much. But at the end of the day, the broader scalp performance was exactly what we were looking at, and you took a trend or a counter trend trade within an uptrend. So there's still so many different possibilities we can play these levels. And the reason I went into this today, guys, is because I got a pretty nice, lengthy email from one of you that we went, who was asking about, I think it was Mario. I'm sorry, it was a great email yesterday. I took the time to write it back. He was asking about, as far as the entries are concerned, how to play those levels and if they should be putting orders in at the levels that we're looking at for the scalp targets. Remember that it's not just that price attains that level, guys. We're looking for a trigger, right? Price needs to reach that, and then there needs to be something to prompt the move. So we have to make sure that we're always being very mindful of that. So I just wanted to use this as an example. Again, I don't like to cherry pick examples and just show you a whole bunch of green arrows, guys. It's not our style. But we don't really talk about the real near-term chart. And when we're trading event risk like we were yesterday, it's very important that you remain A, extremely nimble, and B, when you're trading against the trend, remember that we're looking for triggers that'll disprove what we're trying to do. And every time that happens, I'd rather take a 5-pip gain or a 7-pip, loss, which was the only, or 8-pip loss, which was the only one that we took yesterday, as opposed to taking a stop against the high, leaving my stop against the high, and trying to get, a 50-pip run or a half of the daily ATR run. So just a quick note there. Now, eventually, again, this is now in the wee morning hours in the U.S. I'm gone trying to get some beauty sleep here. Doesn't work very well, but sometimes we try. Eventually, you got the top side break of the opening range, and then it shifted the bias right up to the upside again. And here we are again testing this region of resistance. So now this is going to be the major key resistance as you head into the U.S. trade session. Does this make sense? Does anyone have any questions on what we just went into? I know, again, it's a 1-minute chart. It's not something I'm going to look at constantly, but eventually, always during event risk, you want to get a much closer picture of what near-term price action is doing. And we'll go back and forth between the 5. Now we're here looking. There was a nice trigger right here that would have prompted a short exposure as you made this in the second high again. And note that you're getting divergence into that high. Okay, so nothing's changed. Nothing's changed. The setup from yesterday is still right on tap. We're looking for short triggers while below this region. If you do see a press through that and we break through the European highs, you're basically looking for this median line resistance. Currently comes in just below that key 764, around 78.40, 78.35, this region right here, heading into U.S. Okay. Chintana will look at that. Eileen says, well, wow, thanks for the 1-minute drill. So helpful. Okay, I'm glad that's helpful, guys. Stefan says, thanks for the sneak peek. It's helpful. Great. That's exactly what I want to hear. And your feedback is important, guys. This is, all for your benefit. So if there are questions, again, I'm slow to respond to emails. I'm sorry we're swamped on this end, but, feel free. This is your forum to get them in. Jay says, very helpful. What you demonstrated for the 1 minute can be used on any time frame. So, Adris, it can. But here's the caveat, my friend. The oscillators are always based on the close for that candle. okay? So if you're looking at a 5-minute chart or a 30-minute chart and this thing looks, you know, like it's breaking, okay, like it's breaking to the downside, you can't make any assumptions on the validity of that break until the candle closes. So for example, yesterday on this drop, which eventually attained the 77.45 target that we talked about in the scalp, eventually on this pullback, by the time that candle closed, you're already at target, Jay. So the trigger wouldn't really help, right? I can't make any assumptions on this trigger until that candle closes. Why? Because this could dip. We could get a quick reversal, and it'll come right back above that trigger line, and if the candle closes above that level, it'll look like it never even gave out. Now you're sitting there with a short at the lows of the session. Trust me, I've been there. It's not a good place to be. Does that make sense? He says, okay. So basically, you want to drill into the tighter time frames when you're getting the trigger, because once that candle closes, that trigger will actually give you a little bit more of a solid play. Now, truth be told, obviously, the tighter in time frame you get, as far as drilling into a 5 or a 1 minute, you're going to get false triggers all the time, which is why we're never taking a position solely based on the momentum trigger, right? It's when the momentum trigger is coming and price is reaching an important level, like we did here. Confluence region resistance, and on the 5-minute or the 1 minute, you're getting a short trigger up here. Those are going to be high conviction trades. And again, this is more aggressive, guys. Playing a short off yesterday's highs is more aggressive. I completely, acknowledge that. If you're new to this strategy, this is not what you want to play. You want to be looking to buy this pullback because, again, we're in the uptrend. That was confirmed with the weekly opening range break, with the momentum signature holding 40. There's a lot here that's bullish, but there's no reason, we can't squeeze out another quarter ATR on a rebound off resistance. So, this goes to the email that I responded to yesterday. There's a lot of different ways you can play these levels, and this is why, to be completely frank, guys, it doesn't make sense for me to be able to tweet scalp per scalp, because I'll spend more time tweeting than I do actually trading. But this is the mentality that we're running with. Really nimble on the way down, and then with the directive operative trend, like we were yesterday holding those longs, those are the ones that you want to let run, and then just shave off, bring your stops up. So yesterday, the initial target, if you guys remember, if you watched the webinar, I actually timed it was on the 18th minute. We went over this setup. The initial target at 76.30 is where we got out, quarter. Another quarter executed at 76.45, and then the rest executed right at 77. Okay, as this thing ran through, obviously, yesterday, and 77 executed right before that actual data print last night. So we weren't in any position on this rally. So I missed this whole thing. Frustrating? Yeah, but that's our strategy, right? We have that flexibility. Great, I missed the rally. I can still take advantage of a near-term pullback. All right? I hope that helps, guys. Mark saying, must have been quite a position if you were taking a few pips off at a time. So, I have a standard size position that I trade typically with all my scalps, Mark. Again, on this one, for the rally here, I kind of jumped in pretty heavy because I really thought we were going to get at least, I thought this pullback into 77.40 would have been rather quick on the back of this major stretch, right? Either way, the initial entry on a scalp is always going to be your most critical time, which is why we spend so much time talking about triggers, talking about what puts us in the trade, talking about our risk management, right, Mark? It's always going to be about that initial entry. And then it's going to be about navigating and risk management on the position. Also, Mark, I do want to just note, don't be afraid to jump in. Don't be afraid to double down or add to the position if you see conviction. I'm never going to be a fan of what's the word? I'm never going to be a fan of lowering your average rate or hindering your average entry. But there's no reason when you get another trigger on the short side, like we did here, to add to the initial position. There's no problem with that. So yeah, I mean the initial position was pretty big. As soon as I got a trigger against it, I lowered it to our original trade size, and then stops are against the highs. We're looking for that initial run, and every time you got a trigger against it, I just lowered the position size. A trigger for it, add to the position size. Does that make sense? Mark says, now I understand why taking scalps if the positions are huge. Well, they're not always going to be huge. And guys, I really need to take a step back right now and just make sure that everyone understands. Risk tolerance and the size of the positions that you're taking on a scalp are completely subjective. and based on your own risk tolerance, right? I've been doing this for a while, so I'm a little bit more comfortable loading up on those. You don't want to lever to the hill on a scalp strategy. That being said, Mark, our biggest loss on a setup like this, you know, would have been a 20 pip run. Not even. You know, the initial stop was like 16 pips against the entry, so that's going to be, you know, a favorable risk to reward. Does that make sense? And not only that, as soon as the trade starts to come through your levels, okay, keep in mind that you're bringing that stop to break even pretty darn quick, right? So as soon as you're starting to get into the first target, stops are at break even. Now, you know, that larger position size that you're not necessarily used to taking is in the cover. We're clear. Let the market do what it's going to do. If it's going to press our levels, we'll take profit. If not, we'll get out scratch. And especially when you're fading an event risk rally like that, that's when you want to be really quick to pull in those stops. And in fact, on every entry we took, a stop against the high played perfectly. We never even got a test of those highs again. So just some food for thought there. Great questions, Mark. He says, yes, it's all about the R&R. I understand. So basically, if you enter a scalp and it's also a swing level from Jamie, then size. I'll tell you what, when our levels match up and we're looking at the same setups, they tend to be pretty darn nice plays. So absolutely. You know, Jamie's strategy is a little bit different from mine, but we're essentially looking at the same technical levels. And guys, if you see a level that's lined up, so for example, Jamie's looking at a major key confluence median lines, and we've highlighted maybe you know, a major key fib level that's all clustered in that region. Those are the plays that will typically, you know, really shine very nicely. It doesn't matter what the technical structure is there as long as you know it's there. So I say to people, there's a lot of different ways to get to the same exact location. We can get there's a lot of different ways we can look at the markets to get the same bias, to get the same levels. Everyone goes about it differently, but as long as those levels are highlighted and that's what you're looking at, we're on the same setup. So again, Mark, thanks for the question. Raj says, this is a good time to short the Euro Aussie. Let's take a look. But before we do, I just want to take a quick glance over for you, but there were some questions in the queue here before. I don't know if this is necessarily a good position for me to take it. Again, timing-wise, I'm not going to really usually jump into positions at this time, but it looks like you just got a trigger break. So I'm going to be a little bit more cautious. This retracement is null and void. Yeah, not something I'm necessarily interested in. We'll take a look at this in a moment, Raj, but let me just jump into these questions real quick. Oh, it was you. So Raj says, what are your views on Sterling Key? I remember Jamie was looking to go long last week. Let's take a look at Sterling Key. I can't say that I've actually been tracking this one. So again, this major slope range, once again, is in focus as support, former resistance, catching the highs, sliding parallel here. Got to break out. We never actually filled that gap until late in March. And then on the pullback here we are finding support right in this region again. I think it's a trade that's going to be beautiful. I just don't think it's primed just yet. Not from my end, at least. Let me see what the scalp looks like. Yeah. So a trade like this is not something I'll necessarily be interested in. It has a very nice, healthy ATR right now. But a couple of things I'll note. So the opening range for the week is null and void. Or not null and void. It hasn't even broken yet. So here's your Monday, Tuesday stretch. And it's just been a slow decay of the rally, okay? So, you know, I don't have a directional bias here. And in fact, since the stretch into the highs, momentum holding 40, 60, 40, 60, 40, 50, fizzling out, but no 40 break. You don't really have a clear-cut directional bias on this one. Not yet. So remember, it's not, let me take a step back. The daily chart's what's guiding us. That's what's telling us where we are, okay, on the roadmap. But if the intraday or the near term doesn't have a clear-cut bias, doesn't have a clear-cut directional trend, then, you know, you still need those triggers. So we look for the opening range for the session, the opening range for the week to validate what's happening in the near term. And Raj, I just don't think that I have a clear-cut signal here on Sterling Kiwi, especially as we sit just in that Monday, Tuesday range. He says, I'm long with a small stop loss. If that's the way you're going to play it, yeah, stop against the Asia session lows is how I would do that. And in fact, you actually do have a nice momentum trigger. If we take a high from price, I'd be looking at that. And if that gives out, might be a nice stretch to the upside. Targets for you on this one, Raj. And guys, feel free to let me know if you're holding positions. Even if I don't necessarily, think that you want to be in the position myself, we'll break it down for you. I'm not going to really stress this right now because we're kind of getting messy around it. But with this being the opening range high, or the high is basically for Europe, I would say this is your threshold. Okay, this is the level that you want to clear to validate your upside bias. And if that gives out, I'd be looking for like 95, 90, essentially 96, this region right here, as an initial target. Josh, does that help? What RSI setting do you use, Mike? So for the RSI setting, we talked about this a couple of weeks ago here in the room. Guys, every trade will be a little bit different. And honestly, the 14 is typically what the preset is. I will go back and forth between 14 and 20 based on the pair. So this is literally how I do it, guys. I just go back and see, which is the cleanest setup. Is the 20 giving me more 60 bounces, more 40 holds, and more clear triggers, or is the 14? And whatever is clearer, guys. I mean, some trades will take characteristics where the 14 is a little bit clear, specifically in really volatile times. Because remember, the longer the period that you take, the more candles are needed to push that line. So when we're trading event risk, when we're trading really near term, sometimes I'll squeeze it into a 14. But the 20 sometimes will smooth it out as well, so you don't get as much chop. Raj, it's more just really per the profile of each pair. So just go back and look and see what gives you the cleaner triggers. Like I said, when I'm trading in event risk, typically I'll bring it in a little bit closer for the signal line to have a little bit more ease of use. Also, this is a custom indicator that you can find on fxcodebase.com. It's called RSI2, and it essentially adds the 60 and 40 thresholds for you, so you don't have to actually add those manually. So I hope that helps, Raj. Mark says maybe an idea to indicate it if scalps and swings match. Mark, so again, I don't want to mix the two strategies. They're very independent, right? And they're typically always on the same bias, guys. Just because I'll take a scalp on the short side or I'll take a scalp on the long side doesn't necessarily mean that it's going against the swing trade. We got to keep in mind that they're two separate standalones. You can use them both for sure, but you don't want to have one impact the other. So if a swing trade is issued, guys, with a stop limit and target, that's on its own merits of itself. You want to scalp that pair, that's fine, but make sure we're not trying to mix the two. It's gonna hinder your performance on the long run for your overall account value. So we want to make sure we're trying to keep the two separate. If you're taking a scalp, that needs to be based on the scalp. If you're taking a swing, that needs to be based on the broader swing setup. That's how we maintain a good risk-reward ratio. So I hope that makes sense. Raj says, all the trades you published this week were winners. They're not always going to be like that, Raj, but we've had a nice little stretch. The only one that didn't work really well was actually the Aussie yen, and I do want to take a moment to talk about that. So last week, I published a piece on daily effects. This wasn't featured on SB, guys. Again, I'm always going to keep the cream of the crop for you guys. But the major play last week was the reversal candle that we made off the lows here, off a major key support. And this shifted the bias to the upside. We were looking for longs well above 91.60. Now, that got invalidated pretty quick, okay, on a drop here. And in fact, there were some beautiful short triggers right back into that key support. Here's what the Aussie yen looks like now. And this is, again, actually in response to a lengthy email that I was addressing yesterday on someone who was following this setup and had some questions on the breakdown. So here's 91.60. This is what invalidated, guys, our long side bias. Okay? Notice on the way down, and this was in response to someone saying, well, can I just put orders since 91.60 was the invalidation level? Can I just put a long there? No, guys, that's not how the strategy works. Notice on the way down, there were no long triggers in momentum. The only long trigger you had was right here, and that was in oversold conditions, not something we would have taken, and it was right into resistance. So again, even on the 40 break here, there really wasn't much room to play the long. But there was no long triggers issued, which is why we necessitate that we need something in momentum and price to push the scalp. So yeah, we were expecting a continued rally through 92.50. We didn't get it, but guess what? Once that invalidates, now you're looking for short triggers, and there were a few good ones. Right here, right here. That's the last one that I would have, entertained. But the point of having invalidation levels, right? It's where if the market goes through this, I'm going to change my mentality. I'm not looking to buy pullbacks. I'm looking to sell rallies, right? So just a quick note about that. So where we are right now with the Aussie yen, interestingly enough, we've actually made that breakdown. We tested the major key support that we just looked at on the daily chart again, okay, right here into 94.50, 94.60, or 90.40, 90.60. And the rally here taking out the weekly opening range high. So objectively, you want to be cautious about any type of short side exposure while above 92.30, 92.40, this region here. Levels are the same. Nothing's changed on that front. Okay, still not my favorite setup. Just 'cause I'm a little bit wary of the yen, or of the yen rather. But you do have room here for a little bit more higher of a stretch. 93 being initial area of resistance, but really, there's a big region right here that I'm very interested to see how price reacts as we get into this region. So maybe a scalp I'll be interested in over the next 48 hours. We'll try to see how this pans out. But most of my focus, as you guys have seen, has always been in the Aussie. Raj saying, I just joined SB Trade Desk, so whenever you place a trade, do you tweet saying that you are in the trade, or you just watch out for this level of resistance and support? Also, Jamie's webinar from yesterday did not archive. Yeah, guys, we had an issue with yesterday's webinar with Jamie. We're looking into it. I'm not sure why it's just his webinars that are having that problem, but we're on top of it. I apologize that yesterday's didn't archive. We are well aware and we're working on it. So, quick note on that front. For the scalp side, Raj, no, we don't get scalp by scalp guidance. And again, because of what I just showed you here today, it's very, very, very difficult for me to try to do that, and it's going to impact my trades, which is inevitably going to impact your trade. So I give you the levels, I give you the bias, I give you the invalidation level of what will invalidate our bias, and we're looking for these triggers. And there's a lot of different ways you can play them. Again, where's Tuttle? Tuttle's in the room. Tuttle booked on that rally yesterday. I only got 58 pips on that rally for the Aussie. Tuttle booked even more. He was closer to 70, I think. So again, use the levels for your benefit, guys. And here's again just a couple of charts that I posted or that I saved for the Aussie setup as we went through that. All right. Anyway, Jay Jackson says, can we look at Euro Key? It looks like some sort of support on the daily, but a break of the opening range puts the bias short. Let's take a look on Euro Key. Yeah. Once I start looking at pivots, I'm getting desperate for levels on this. So here's what the daily chart looks like for Euro Key. It's not my favorite pair because I have Kiwi coming into resistance, and Euro is kind of bearish, right? So let me do each one of these, Jay, and then we'll jump into the cross. So here's what I'm looking at with the Kiwi. Coming into that 2013 low, okay, that 2013 low registered right around 76.82. We kind of tagged that high last week. Also looking at a basic trendline resistance from the October highs and the median line for the current operative formation. Kind of all of those are lining up just below 76.80. So you might have some more upside to go on the Kiwi. As the Euro stands, here's what that pair looks like. Don't have any clear-cut conviction. It looks like it's breaking the week. Yeah, it looks like it's just breaking the weekly opening range high here. So this actually looks a little bit more constructive. Let's look at Euro Key. And again, I don't actually like to stress each individual performance, but when you have a pair that's doing something like this, it's always better to get just a general idea of what it's doing versus the greenback. All right, let's see what the scalp looks like. Here's your weekly open. And again, I'm going off the cuff here. It's not a pair. I've been following Jay, so just bear with me. I remember that rally. That was a nice play. Okay. Raj says, so at the end of the day in SB, is there a section in SB where it tells you the pending trades, i.e. dollar CAD was uploaded there last night? Is that correct? Yeah, Raj. So you can, it depends on what trade you're looking at. For the swing trades, yeah, absolutely. You can always click on the swing trade post for the day, and that's going to have all the latest pending orders. So just go to SB Trade Desk Home, swing update, and then it's going to have all your pending trades or current trades and a watch list for what we're looking at. On the intraday page, I'm always highlighting the scalps that I'm currently trading in. So you have the setups for you. These are updated at night, right before the European Open. So you guys have it throughout the course of the trading day. So the weekly scans, Raj, and the things on the swing page, on the long-term charts, I'm going to leave that to Jamie. I'd encourage you to come into his webinar. He does one on Wednesday at 1 o'clock. And he'll be able to give you a lot more clarity on that. I want to try to keep it on the swing, on the scalp side of things here. He says, okay, sounds good. Welcome aboard, Raj. Great to have you, sir. So for Euro Key, Jay Jackson, I'm looking at the divergence that's coming into the lows. I'm looking at the fact that the weekly opening range high, or the weekly opening range low, comes in right about here. So this is last week's low. And this is the weekly open. We broke through it briefly. If this invalidates and you hold it to the upside, I'm going to call that a false break, and you're just still focused on the weekly opening range. So you don't get a directional bias trigger yet, per se. Take the high in price, take that trigger, and it highlights resistance right ahead of 50 here. This is done. This is done. Watch that S1. Yeah, I can't say I'd have a really good handle on this one. I can't say I'd really have a good handle on this one. I want to see what happens in the Kiwi if it hits that resistance and reverses or not. I think that's going to be a broader move there. But as far as Euro Key is concerned, yeah, it's not really my cup of tea here. And I see what you're saying as far as the April opening range, right? I mean, depends if you're calling this the April opening range break, Jay, or if you're calling this. If you're looking at this, it needs to be a close, man. So we can't make that invalidation yet. It is the 16th of the month, so I'd be more inclined to use the lows that we kind of worked here. But in any event, you know, I'm not going to start shorting Euro Key at the lows at the S1 monthly. It's tough here. Are those monthly or weekly pivots, says Chris Baxter, on your Euro dollar chart? So these are always going to be monthly pivots on the on the daily charts. I don't really work very extensively, Chris, with pivots. I find them much more helpful in equity markets where there's an actual close and open of the market. Whereas in FX, yeah, we use 5 o'clock as sort of a staple, but you know, it's pretty much going all the time. So I don't really think, you know, I don't stress pivots. I'll tell you this much, Chris. When a pivot lines up with a major trend line, median line, Fibonacci level, longer-term moving averages, major highs or lows, low day highs or close, those are when the pivot to me stands out and becomes much more technically significant. Whereas, you know, just using a standalone pivot strategy, in my humble opinion, I just, you know, if it works for you, great, but it's just not something I'm we'll be working with. Chris says, I know some people who use the probability of them being hit as part of their day trading strategy, but I don't care for it myself. Again, everyone's got their own thing, Chris. I don't, want necessarily. I mean, if it works for them, that's great. We're all about making the profits, right? But for me, the strategy needs to have like technical significance for it to click in my head. And for pivots, like I said, in equity markets, I think it's great. But here, I take it with a grain of salt. Like I said, when they line up with a major level, all the more conviction, But using it standalone, it's a tough sell. Jay says, okay, I had an April opening range break at 42.50, but consolidation on the daily worried me. I'm not sure. I see what you're saying. I would be looking at that 42.50 level just because of that. That was the actual break that we got in the close of that session. It's actually a pretty interesting level to hold because if you look to the left, there's been a nice little support barrier there for the pullback in March as well. But I'd be cautious here on this pair. Chris says it's a bit too one-dimensional, just relying on statistical probability, as you say. It needs to be used in combination with something. And Chris, so much in analysis is like that, or so much in trading. I hate the word analysis is like that. People run with a strategy of a crossover strategy or this strategy or that strategy, and it's just markets aren't like static like that. It doesn't. If it was that easy, guys, and I could just look at a line, it's going to tell me when to buy and sell, and what's all the fuss about, right? So yeah, I am a big fan of combining technical things to add trading clarity, because there is no one shoe fits all end game scenario here. Great discussions. So let's just jump right back to the intraday page again. I do want to just touch really quick on the dollar CAD. This was a setup I also highlighted on Daily FX. Whenever I do put a Daily FX post, guys, that is going to be featured on SB, I always give you the link as well, just because there's accompanying video, so sometimes it'll help you there. Just give it a little bit more clarity of what I'm looking at. But we're still sitting in it. The major key support that we came into was just at the 123. We did push below, but last time I checked, we were still holding that as near-term resistance, and here it is, the 123 handle. Basically, this region is huge, guys, and if you look on the daily chart, it really offers a little bit more clarity on why. You have the basic trendline resistance, support, now resistance, 1, 2, 3 tags, validates it. Remember, 2 tags of support, speculative, 3 tags of support or resistance confirms. 2386 was also the low close for February, so we'll note that. It's also the low for April, so on an opening range play, objectively that's your low, okay? And just below that, 2358 was an exact 100 off the high. So if this was just going to be a correction, and you're going to look to find some major support here, this is where the market would have rebounded. The fact that we pushed below and closed below reinforces the downside. And that was the point of yesterday's scalp. So here's what the intraday chart looked like. At the end of the day, I interpret this right here as a very clear weekly opening range break. You could have even interpreted this. This was a trigger both in momentum and in price on just an opening range break of the initial Sunday trade session or Monday trade session. But on a more weekly standpoint, this is a break. Also, that break took you below the median line off the highs. Nice pivot in price. And a clear-cut trigger after a 60 failure here in momentum. So there's a lot going for the downside of the trade. Obviously, it's always going to be better to sell into resistance than to buy or to sell a break of support. On a trade like this, no, I did not take anything. Why? Because if I take a short here, where the heck am I going to put my stop? Way up here? Right? 30 pips? Actually would have played out, to be honest with you. Let me take that back. It actually would have played out. I didn't take it because, again, I'm not going to go short at the weekly low until we got the confirmed break. And confirmed break didn't happen until this thing went into oversold condition. Now it's a very hard sell. It's a very hard sell. So sometimes we're not going to catch the move, guys. There's no problem with that. There's always more opportunity. There's always another setup waiting. And I just wanted to highlight this on Daily FX and show folks what we were looking at. So at this point, let me just zoom this out and give you a quick snap here on what we're looking at. So at this point, this is the slope range in focus, okay, right here. This support caught this low, caught this low, caught this low, and here we are again. A break lower, you're looking for a soft target at 122. It's nothing major. 121.45, 120.50 is going to be what will be a little bit more of a significant, oh, let me fix that. Excuse me, the 121 handle is going to be a little bit more of a significant support here for the dollar CAD on the break lower. So, look, I mean, this is the fallout zone. Anything sub 123.50, 123.60, this region here, anything below this, you know, this thing has the potential to really start to fall apart. Also, just note that right at 122 is going to be the 100-day moving average, which might offer some support as well. What we need is a break below 40 to validate this move here on the daily. So I'll be watching that today to see if we get it. The last time momentum broke, and this is a nice drill for you guys to do at home as well, you know, last time momentum broke 40 to the downside was back here. That was a nice little decline from 108 right into 106. Nice 200 pip move there. So use that to your advantage. And specifically with what we're seeing in price, you know, you might get a little bit of a rebound here. Look for the rally to get capped out somewhere in this region. And then we look to see if we can get that stretch to the downside. Does that make sense, guys? On dollar CAD? So right now in the near term, you know, this is going to be the near term bearish invalidation now that we've pressed below it. Josh says, yes, awesome. Mark says, with SB Trade Desk, it's also easy. Cheers, sir. Jay says, okay, thanks. Chintan says, can we take a look at Sterling Oz, Mike? Sure can. So that's dollar CAD in a nutshell. We're looking to confirm this downside break. Remember, Friday, tomorrow is going to be the big day for the CAD because you get a double whammy, U.S. and Canadian CPI at the same time at 8:30. We'll keep you updated on SB Squawk. Stefan says, just curious, I missed your question earlier. He says, just curious, how many potential scalp pairs can you realistically follow at one time? Like 4? What's your capacity to pay attention to all of this? Stefan, I ask myself that question all the time too. No, here's the deal. I will post, you know, all the setups that are interested, or that are in my view, that I'm tracking. How many of those I'm actually executing in? Stefan, it's very rarely more than 3. I would say typically it's 2. 1 or 2. Yesterday, I haven't, you know, really was just involved in the Aussie all day. It really depends on, you know, the triggers that we're getting and what price action is doing. But I would say what I'm actually executing in trades, yeah, it's pretty much on average 1 to 2, maybe 3 setups if there's a lot of volatility going on. But that's stretching it, Stefan. Now, you might still see 4 setups on the intraday page, but doesn't mean I'm trading all of those, right? Remember, guys, we want to cherry pick. You should never feel obligated that, oh, this is the setup, okay, I need to buy here. That's not how we want to trade, right? I try to offer as many setups as are visible in the markets, and you want to cherry pick, thumb through them. Okay, this looks like it has a forthcoming trigger. I'm going to watch that. Set out some alerts for yourself. Okay, I'm looking for Aussie to come into that, you know, major key area of support. What level is that? I keep forgetting it. We were looking for that 75.90 level, right? Let me put an alert here. If it comes in 75.90, great. You guys can use Alert FX. A good friend of mine started that venture a couple of years back, which you can use SMS, you can use email, and it'll alert you to different levels. You can use it on the platform, whatever you're comfortable with. And don't overload. Stefan says, I'm struggling with my capacity, but then I'm a newbie. Yeah, it comes with time, Stefan. Again, if you're newer to the strategy, guys, just pick and choose 1 or 2 pairs that you want to follow and walk through that setup on a daily basis. Don't overload yourself. Again, I'm going to put as many setups there as I can because I want to give you guys as many options as you have so that if you miss one setup or if you miss a trigger, well, there's a couple other setups we're looking at. But by no means, you know, if there are 5 setups or 4 setups or on the intraday page, by no means does that mean I'm involved in every single one. Does that make sense, guys? Absolutely. Mark with another great point says, oh, in my opinion, different currency pairs have different behaviors. Get to know some and leave the others out. 100%. They have their own profiles, right? How they move, how they react to different data prints. I can tell you that in my career over the last 10 years, the trade I've executed most in has in fact been the Aussie dollar, 100%. You know, I would be as audacious to say that probably 60 to 70% of all my trades have been in the Aussie over the last 10 years. Just because I like the way it moves, I like the technical clarity of it, the crosses tend to jive well with my type of strategy. And again, that's subjective. So, you know, you'll get your groove. You'll get your groove. Stefan says, thanks as always, B. That's good advice from Mark. And Mark, thank you. I appreciate that. So we have another question from Raj saying, Aussie CAD, please. I'm thinking of a short. So right off the bat, you want to be cautious because you have Aussie coming into a high here, major high resistance. So I actually do like the fact that we're looking on the short side because we're at resistance. CAD, well, that's struggling on the downside already, and that's CAD strength. And I do just want to bring your attention to that data tomorrow. So any CAD crosses that you're looking at, make sure you're going to watch that. Remember, guys, Canada is the only what pair is it again? Sorry about that. Aussie CAD. Canada is the only economy that is at the 2% inflation target. Okay? U.S. is undershooting. Europe is way undershooting. Japan is undershooting. Everyone's concerned about the slower dampening inflation outlook. Canada is the only one that's above 2% right now, right? 2.2% on core. So if that comes out stronger than expected, we may continue to see CAD strength on expectations that not only will we not see any type of interest rate cuts from the Bank of Canada. Remember, they cut earlier this year, and they said that that was preemptive. Okay, and there actually there's some comments that came out yesterday about him saying that he was surprised that the shock that the oil and energy prices had on the markets have already started to filter through. They were saying that this is something that will take time and will eventually filter through the economy. They're already saying that that's starting to be out there already. So the Canadian CPI print, again, we're not here heavy on the fundies, guys. I'm not going to bore you, but tomorrow's print is going to be pretty big for the CAD, I think. So for all the CAD crosses, keep that in mind. This is the resistance level I'm looking at in the daily chart. A really nice pivot in price. So I'm not really against the short. From a scalp standpoint, see if there's any triggers here we can take a look at. Well, it looks like that already gave out. Okay, here's what I can tell you. It looks like momentum is waning. This is a 5-minute chart, and that's based on lower high, lower high, lower high, higher high, higher high, higher high, some divergence right along those highs. The only thing is you haven't gotten the trigger for the downside yet because momentum's still holding 40. And on a 5-minute chart, that's a pretty clean tell in the near term. So in every pullback, you found momentum at 40, keep looking higher. Momentum support at 40, keep looking higher. Momentum support at 40, keep looking higher. And here we are again. So if we break 40 and you see a break of the U.S. opening range low, that might be a decent short position. You know, kind of squeezing the risk to reward already from this level, but that's how I would validate a near-term down bias. Okay, and then we would look to sell the subsequent rally against this high. It's just that, you know, from an objective standpoint here, if you just look at this from a weekly range standpoint, here's the weekly open looks like. You know, you haven't even necessarily made a break of the weekly opening range yet. So that's one of the major things I like to look at to give me that conviction bias. So I hope that helps, Raj. Some interesting pairs you're looking at here. Guys, I do want to take a quick segue and just run through, we're running low on time here, some other charts. Gold, this is something I will follow obviously every single day. We got the rebound off 1183. We talked about that on Tuesday update. Not really looking to do anything here. You might still have some more upswing to go. I think if the dollar materializes on the breakdown here, you do see higher highs in gold. This is the bullish invalidation level. You can play inside the monthly range if you want. Keep in mind that the entire monthly range still consists of just the 4 first days of April trade, which for me is, you know, a very clean opening range trade. So we'll need that break to validate the medium-term bias. This is going to be the bullish invalidation level for gold. Looking at some of the other dollar crosses, dollar yen is in focus as well. This thing is just hugging that former trendline resistance as support. Okay, right here is kind of what we've been looking at. Let me adjust that for you. And on a closed basis, we're right there. On a closed basis, we're right there. So again, a little bit of a fake out here. I think this is still waiting for some direction from the dollar. I'm not really looking to do anything with the dollar yen right now, especially with the ATR contracting. You're only seeing 87 pips on a daily basis. Remember, we were actually really heavy on dollar yen a couple of weeks ago when we were putting in those larger swings. But with a 22 pip scalp target, for me, I just think you get better buck everywhere else. Even the euro yen trade that Jamie was looking at yesterday was, phenomenal, right? So that one coming to a first area of resistance here, completing a basic 38.2, and that's at 128.08. Hey, I really appreciate the feedback, Stefan, and I'm sure other people are thinking the same thing. Guys, there's still a lot coming down the pipeline for SB. We have a lot of things that we're adding to say. I know I've been saying that for a while, but there's a lot going on this end, trust me. He says, is it possible to have on your website a page that screenshot of your closed trades and short article on what triggered the trade, your target stops, etc., if losing trade, what you did wrong, what you might have done differently, something to write in a trade journal? I believe it would be extremely helpful for me and other new traders to your style of trading. Stefan, it's definitely something we can look into, 100%. I am more inclined to do more webinars, in fact, because I think it's much quicker for us to be able to relay this information verbally so you can see it in front of you, whereas me trying to type that out and the reasoning behind it is going to take a lot more, is going to be much more time intensive, but definitely something I'll take into account. Essentially, that's what these webinars are every morning, guys. We're talking through the trades, what went right, what went wrong, where we can go from here, and what we're looking for moving into the U.S. session. So I want you guys to feel free to ask any and all questions that you do have. Are there any other pairs we want to take a look at before we leave? Let's see if we can see the Kiwi give us that resistance hold. As far as the Aussie is concerned, that's still in focus as well. You're still at risk for a pullback there as long as you stay below this region. Looks like we're going to try to see a topside move here. Not really interested in long exposure from this level. The only long exposure that would have been great would have been that trigger I showed you last night after we jumped out of those shorts. But from here, it's tough. What's the stop? Would have to be 7. Yeah, it's tough to try to take a long position from here. We'll have to see what the opening range looks like. Okay, even if the opening range breaks to the upside, I don't think I'm going to necessarily be playing that one unless you get a decent pullback here that allows you to take a stop against that 77.50 level. If the opening range breaks to the downside, again, support at 77.40 is not too far off. So I'm not really sure there's a play for me from this level in the Aussie. If anything, the topside breach would have to give me something on the pullback here to get back long. So probably gonna watch this for the remainder of the day. Again, we were very active on the way up. We played this short on the way down yesterday. I kind of want to let this sit out here as we head into Thursday. Remember, when you're talking about opening ranges, it doesn't necessarily need to stretch into the end of the week, okay? The opening range, if it breaks on Tuesday, you're looking for a Thursday, Friday high. And I say that with conviction, guys, because I've seen the high registered on Thursday, and I've seen the high registered on a Friday stretch a million times. So I don't want to necessarily stress that bias into the close of the week. Okay, and this did break the weekly opening range yesterday, but now we're still at our key resistance, and I want to keep that in mind here. If we close above this on a medium-term stretch, again, you're basically looking for 79.40, and there's really a lot of room here to the upside. Okay, Sterling Oz comments. Mark Lavender, sure can, buddy. Here's what the Sterling Oz looks like on the daily. Again, not a trade I've followed recently this week. This is going to be your key support still. Interesting. What are you looking to do with this, Mark? We are over on time, so I just kind of want to run through this for you real quick. Okay, here's your weekly open. Basic trendline support coming into focus here. I would still stick with these levels, to be quite frank with you. This is what I would have as the near-term bullish invalidation level. So break below that would definitely keep the focus weighted to the downside. That's just going to be basically your Asia Pac lows and that trendline support. Near-term resistance still at 92. Levels are not too far off, actually. 50 pips is a quarter daily ATR. So the levels actually look pretty clean, Mark. I think you might get or you could get a pop higher from here. Just on account of that trend line, but at the end of the day, you're still in the initial weekly range. So I don't, again, if the weekly initial range doesn't at least give me a trigger, guys, I kind of don't even, focus on it. It's just provide the 5-minute trigger to the downside. Let's see. Yeah, you're absolutely right, but that trigger is done. That trigger is done. So guys, remember, we can't play late triggers. If you don't catch the trigger on the break, it's done. That's not something I'll even look at now. It's done. You've already seen a 50 pip drop. That's your ATR. That trade is done. So, Chintan, keep that in mind, man. Okay, we can't play late triggers. Those got to be. That's why we choke it up into the 5-minute, 1 minute. So we don't end up doing stuff like this. This was actually a really nice trigger to the short side because momentum held 60, and then you got the trigger break. So that's classic. Trigger. Not only that, divergence into the highs, followed by trigger break. 9 times out of 10, we'll take that position. If you're holding shorts based on that trigger break, I wouldn't be out yet. I definitely would have booked a quarter, half the trade at the 50 pips like we're supposed to. But, you look to see maybe for another tag of this region, stops at break even at that point. All right. Mark, if you're looking to play the long man, that's the invalidation level. As close as you can get to those lows. With a proper entry, I have no problem against that, especially if momentum holds us 40 into the open of U.S. trade. But that trigger was valid, so just keep that in mind. Chris Baxter says, I'm liking what I'm hearing and seeing from SB Trade Desk. This is my second week as a subscriber, so I'm still getting up to speed with your trading vernacular, methodology, basically how you work the trade. I use moving averages in multiple time frames myself, so your approach is useful. Additional to my trading style. Chris, I'm glad to hear that. And again, I tend not to like working this service as a static thing, guys. We're always evolving. We're always, going with the focus is on the trade and always will be. We don't want to focus on any noise. You guys probably get enough noise from Twitter and all this media headlines. Our focus is the trade. That's what we're looking at. Price action is what we trade. And, I am all about it, Baxter. So, Mr. Baxter, so welcome aboard again, and feel free to throw out your questions, guys, suggestions, things you want to see, things you wish you had, anything as far as that's concerned. We're more than happy to oblige. Can we have a gold 30-minute chart on the intraday page? Lee, I don't follow gold that closely throughout the day. Again, you can only trade it on the futures platforms, and a lot of the clients that are U.S.-based can't trade gold. So I'm not sure if it's worth a time standpoint, but Lee, if there's a specific trade that you're looking at, or if there's a time period that you want, let me know. I'm more than happy to put something together for you. It's just on a day-to-day basis. I'm not sure I'm going to have the time to really track this on a 30-minute scale. But for sure, same type of analysis works. And in fact, I used to be a heavy scalper of gold back on the futures markets. Back in the day. I used to love trading this thing on the intraday, especially during the crisis. This thing was going nuts, but it's something we'll consider. Guys, we'll wrap it up there. I hope today's session was helpful. This is going to be the last intraday session for the week. We're back online on Monday on Daily FX. It's the only public webinar we do. So I'll see you guys at 8:30 on Daily FX, and then again Tuesday, Wednesday, Thursdays here on SB. We'll walk through. Hopefully we'll have a lot more setups for you this week, guys. It was a shortened week for me because of vacation, but we will be back in the full swing of things from the webinar starting next week. So we'll give you an update later today on intraday. Keep in mind, tomorrow's major event risk is really going to be the player for the CAD crosses for the dollar on CPI. And as always, we'll keep you updated on SB Squawk. Guys, have a great trading day. We'll see you next week. Cheers.